You make $5,000 a month. You drive a new car. You carry two premium credit cards. Your Instagram looks successful. But at the end of the month, why does your bank account feel smaller than your lifestyle? Let's talk about something uncomfortable. In the United States and across much of Europe, financial stress doesn't usually come from poverty. It comes from normal, socially accepted decisions. Imagine Daniel. He's 29, lives in Chicago, works in marketing. After taxes, he takes home around $4,800 a month. His expenses look reasonable. Rent, $1,700, car payment, $540, car insurance, $180, student loans, $350, minimum credit card payments, $220, utilities, phone, subscriptions, $300, groceries and eating out, $600. That's already $3,890. Now add gas, occasional shopping, weekend trips, birthdays, random Amazon purchases. He's at $4,500 without trying very hard. Technically, Daniel is doing well. He has a stable job, a clean apartment, a reliable car, a decent credit score. So why does he feel behind? Because the system makes debt feel like progress. In the US, average new car payments are often above $500 per month. In parts of Europe, like Berlin or Manchester, financing is just as normalized. Monthly payments are framed as manageable, affordable, smart. But monthly payments hide total cost. Daniel's $540 car payment over 6 years, that's $38,880. Not including insurance, not including maintenance, not including interest opportunity cost. If instead that $540 were invested monthly at a modest 7% annual return for 6 years, it would grow to roughly $47,000. The car doesn't just cost $38,000. It costs what that money could have become. That's the illusion. Credit cards operate the same way. Minimum payments feel small. $220 doesn't sound dangerous, but if Daniel carries a $9,000 balance at 22% interest, he's paying almost $2,000 per year just to stay in place. The financial mistake isn't irresponsibility, it's confusion between cash flow comfort and wealth building. Monthly payments reduce friction. They make expensive decisions feel lightweight. Psychologically, humans discount future pain and prioritize present identity. Daniel doesn't buy the car because he loves debt. He buys it because it signals stability, because coworkers drive similar cars, because after years of studying and working, it feels like a reward. This is lifestyle inflation disguised as adulthood. Across the US and Western Europe, middle-class earners often upgrade expenses at the same speed their income rises. Salary goes up $800 per month. Fixed costs quietly rise $700. The result? No margin. And without margin, there's no investing power, no flexibility, no negotiating leverage with life. Fast forward 10 years. Daniel is 39. Salary increased to $7,500 after tax. Sounds impressive, but mortgage payments replaced rent. A larger car replaced the first one. Lifestyle expanded with income. His net worth? Maybe $40,000, maybe less. Not because he failed, but because every raise was pre-spent. Now imagine a different version of Daniel. Same salary, same city, same opportunities. But instead of asking, what monthly payment can I afford, he asks, what level of fixed costs keeps me flexible? He buys a reliable used car for $18,000 cash, no payment. He uses one credit card but pays it in full every month. His housing cost stays below 30% of take-home pay. Now, his fixed expenses drop by $900 per month compared to before. That's over $10,000 per year of breathing room. Invested consistently at 7% for 10 years, that becomes roughly $140,000. Same income, different structure. Financially intelligent people don't look dramatically different from the outside. They just design lower mandatory payments. Because wealth is not about visible consumption, it's about invisible optionality. Car payments and credit cards are not evil, they're tools. But when tools become identity markers, they quietly control your future. The illusion of financial success is smooth. It feels responsible. It feels adult. Real financial strength is quieter. It's having the ability to lose a job without panic, to move cities without being trapped by payments, to invest without calculating which bill gets delayed. Most people don't need higher income. They need fewer permanent obligations. If this perspective helped you think differently about your own numbers, consider subscribing.